What's up, traders? I want to talk about spikes, spike trading. Spikes are a reversal signal that I discovered by getting stopped out a lot when price jumps in one direction and then quickly reverses to the other. There have been a lot of good examples, and I'm going to use one from this week using TradingView's bar replay feature to show how to trade these spikes. Now, by the way, this indicator is one that I wrote up for TradingView. If you want it, just send me a message on either TradingView or on Discord, and I'll give it to you. I'm not selling it, even though a lot of money can be made on this, because what it essentially shows is where price swings in one direction and then goes back the other way. Let me really quick just kind of show how that sort of develops. We're going to make it really slow. This is Thursday this week, the 12th of September, 8:25 on the 5-minute chart of the S&P 500 futures. And so basically at 8:30 there was news, and you have one of these big giant news bars. And what really happened here was price spiked above the prior pre-market high here set at about 3:30 a.m. Eastern. And that's key. That's key. The main things, we're going to only write out my rules here. So, spikes must be at a major SR. That's really key. Now, the types of SRs are going to be highs, high lows, major high lows, and also I look for 50% retracements. Now, you can use other Fibonacci retracements if you prefer, but I only really look for the 50% retracements. And now, as of the last year or so, I've started looking for volume profile levels. Those are really, really key. And so that's going to be what I'm looking for. And this fits that criteria there, because we have, of course, a high that set up in the pre-market, really clear, really easy to see. And then you have the bar spike up within that same 5 minutes and then close back inside the range. And that's what the indicator basically shows. And then I'm going to have the crosses that you see are for setting up the actual trade. The entry point is always going to be this red line, either the red line here or the red line of the bar itself. Now, what this is based on is Ichimoku. The Ichimoku Tenkan-sen. I've had questions about that, like what is it? Why is it like that? Well, Ichimoku is an indicator set that looks like this. I'm not going to go into it in this video, but I just picked the red line as sort of my trigger. It's the 9-period median. Basically tells you where the center point is. Again, like I said, I like 50%. And you have these. This would be a short spike because, again, think about it. People got long. People jumped into this going bullish at 8:30 on news. And now think if you're a trader that went bullish up here, you need to get out of your position. And what you're trying to do with the spike is play the reversal of people getting stopped out. Whoops, that needs to be a short trade. And so what I like to do is I like to just set a stop right above that high, because, again, everyone should already be stopped out at this point, right? Think about how many people put their stops up here. And how many times have you taken a trade and it comes up, takes out your stop, and then goes the other way? That has happened to me for years and years and years. And then finally, about half a decade ago, I figured out, let me just make money on that instead. And so when you do that, you can usually set up a 3-to-1 risk-reward ratio. The little cross right here basically measures a 2-to-1 from the entry to the stop, and then the next was a 3-to-1. And you want to make sure, let's go here to the next points. The target, or let's see, the profit target must be, I want to say reasonable. Let's just say within the next major support resistance. Okay. Yeah, I like that. I like that definition a little bit better. And I'll go into a lot more detail on that as we go along. And by the way, if you guys have questions, I don't mind asking. I'm doing this on a live stream, by the way, which I do every week at 4 p.m. So if you guys have questions on the way, I love teaching. That's why I do this. So the next resistance supports, because we're going to be going short on this. And now look how juicy this would have been if it actually gone short, is 5,500. That would have been a great target, but that's a little far for day trading. So what we're going to do is we're going to look at the volume profile for this leg up, and we're going to see where are our major levels. Well, we have one support. The point of control is there at about 5557. And then the next one, which is more closer to our 3-to-1, is the 554575. And so I'm going to make that a little bit further down like that. And then there's going to be our trade to take short. Now you notice it hasn't triggered yet. That's because I'm going to be patient. I don't want to jump in this thing with a market order, because very often, and this is what the whole premise of it is you're going to get a pullback to that red line, that 50% retracement level, the 9-period Tinkinson. And so we're going to watch that play out. These are 5-minute bars. And so, we got our entry because we were patient. It took us about 10 minutes, but let's speed it up to about 1x right now. And we're going to sit there and we're just going to be patient, and we're going to let it come to us. Now, of course, I took 2 ES contracts and take profit at the target there, and I felt pretty good about it. Made the trade free. I did move my stop down a little bit to here, but I didn't take it all the way down. As I said, I really wanted to see this thing break down, but market is very bullish this week, and it came back, and that's fine. But that's why I have a 3-to-1 target, and you can take it all off if you want to. You can take it to trade in itself. But this finally did come back and stop me out and go bullish, but that's fine. But this is a great example of trading these as reversals. Here's a little bit better one. Let's look at today's NASDAQ. Now you can use this in any instrument, any time frame. That I get asked that question a lot. I believe that any indicator should be good on any time frame, any instrument. Otherwise, it's curve fit for whatever you're just looking at. All right, so there we have 9:30 this morning. Again, that Thursday was an 8:30 news event. This was a market open, 9:30. That's key. That's really, really key. That's not a rule, but that's more of a let's call it a lesson or a hint. No, let's call it a lesson. Timing elements. Now, this can happen with stocks on earnings. It can happen around news, like it did on that Thursday. It can happen around FOMC. Oh yeah, FOMC's days are really, really good. When J Powell speaks, he can create some spikes as well, and really, really juicy spikes. All right, so we're going to set this one up again at our Tinkinson here. Our stop. This is a long trade. Oh, where did this spike happen? I'm getting ahead of myself. It happened at this pre-market low that was set at 842 this morning. And so what you really are looking for is people that were getting long off, let's say here, and they had their stop losses down here, and they just got taken out. Or people that went short thinking this thing was going to go down, and now they're looking to get out of their trade because, well, they don't want to be on the wrong side and lose money. You're basically playing the psychology of the market here, where price thinks it's going one way, and then everybody gets burnt, and you're trying to get in where everyone's getting burned. All right, and so to get a 3-to-1 on our risk, we're going to have to go up there. And if we look at the prior pre-market high, which is about 140 last night, is that within our rules? Are we at that point? Yeah, target must be within the next SR. We can even probably go up to that high right there if we wanted to. Yeah, so we have a pretty good range here to get into a long trade. And that did play out. We already have spoilers that the market was bullish today. And so that is another example right there of it going direction we want it to go. So I don't have a preference, V1. You can use it. I will say this, like when I'm day trading between 9:30 open and about noon, I'm going to do the 1 minute. I actually don't trade futures outside of that time frame. But 5 minute is going to have a lot less opportunities. But you know what? The higher you go in time frames, it's going to be a lot cleaner. Let me look at one more example here. This is on a stock. This is on Lowe's. This is from a couple of weeks ago. And what I like to do is this is kind of my little trick. Not a trick. I look for the open 30-minute, because the best way to kind of divide up the time frames for stocks are in 30-minute increments, because there's 13 30-minute bars in a given day. So it's a nice way to kind of get some good setups intraday that can turn into swing trade setups. And so this is Lowe's. What actually happened on this date, I think it was August the 13th, was Home Depot, which is a very related company, had earnings, and it created a opening bar spike. I love these things. These things that happen from the period of 9:30 in the morning, the open, until about 10 a.m. These are really good, because think about all those orders that are getting cleared out and how much volatility can happen in that first one. Notice also that we have, let me read my rules here. This is a great example I wanted to use because this is at a 50% retracement. I always try to measure what makes it. A lot of people ask me, what do you measure? Where do you start it? Where do you end it? Just do what makes a lot of sense. I mean, we got a lot of gobbledygook back here, but really this trend, this part, the section of the market that began in July to here, that's a trend. And then we got a nice 50% at 230.41, and boom, that's what we spiked out on. Oh, I forgot one thing in my rules. So 3, ATR clear greater than 80%. What does that mean? Let's talk about that before we play this out. So if you notice here in the indicator, it says ATR clearance 136.53%. So what this indicator fires off of is the distance between the prior high or low and the low of that bar. Okay. And so that distance right there, to keep it normalized for different instruments, I use ATR, which stands for average true range. It's the average height, high to low, of the last, in this case, I think is about 20 bars. You can set that in the indicator, by the way. So the ATR is basically a measurement to really figure out what is significant. And so essentially what this tells us is that this distance, the square box right here from high to low, is 1 and 1.36 ATR. So it's more than one average true range. In other words, it's significant. It's a real break. And that keeps you from having tons and tons of spikes. That's what helps me normalize the prices. And my ground rule is the clearance must be 80%. Now you can set that to show or not show in the indicator if you want, but this is what I'm only going to take, ones that are 80%. Higher ones are better, but doesn't necessarily mean that they're 100%, but higher the better, yes. And this is definitely ATR clearance of 136. Let me reverse real quick. Let me look and show you guys what the ATR clearance was on that ES 5-minute from, hold on. Oh, let's clear it. Go back and then we'll jump back to Lowe's. So this one, we have to go, by the way, if you're using the replay feature, you have to go back because it doesn't draw it. So this one from that 8:30 was a 192% break of there. So that fits our rules. And the NASDAQ from this morning was a 107%. So we fit our rules on both those. And also the lows. And this is going to be the last one we look at. Again, if you guys have questions, you can send them to me. I prefer for people to ask on my Discord channel where I talk about these. That way everyone can answer the same questions. I had someone ask about, let me bring that up real quick from the chat. Well, I'll do that after this. So yeah, this one, great example, happened at the 136. Lowe's is also a company that I happen to be bullish on. I already own Home Depot, so I don't mind double dipping into the home improvement parts, whatever material sector. Nice, easy 3-to-1. In fact, because the high is all the way up here, what I'm probably going to do is I'm going to say, let me just do a little trick here. I'm going to find out, okay, where's our actual proper high? Yeah, we're going to use that. That's where the VP level is for that area. We're going to go up to there, and at 245 is going to be our level that we're going to target. 4-to-1 risk reward ratio. And that's where we're going to take a little bit of profit. I'm going to leave some runners. I am buying shares, by the way, but you can do options if you prefer. I'm not going to hate on you. I just like actually building a portfolio of winning trades. And boom, 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 boom. So we hit it. Yeah, we hit it. We got our target out right there. That is why volume profile is so freaking valuable. Although it wouldn't have mattered because Lowe's kept on going. But it was a good place to get out there based on that high before it finally broke a little bit higher. And you leave runners on as well. So that is a good example. Of course, I need to make some more videos about volume profile because it's like a cheat code. But that is the essential usage of the spikes. And you're going to see in a lot of these cases, a lot of people ask me if we just go back here and look, hey, the indicator fires. Like I said, moving averages will fire at different points. And yeah, you're going to see this happen a lot. But what do these all have in common? They did not have rule number one. They were not at a major high or low. They were not at a major retracement. They're just kind of out there in the middle of nowhere. But if you're patient, and you look for spikes to happen at a key support or resistance, those are going to be the ones that you want to take. Think about it as if you were somebody, a trader that was in that position and on the wrong side of the market. Like this person right here, or these people that tried to get short, they tried to short it at the open. Now they're in trouble. And what they got to do if they're in trouble? They got to stop out. And what you see as you're making money as this reverses is other people getting stopped out. Hey, I'm sorry, but the market is a zero sum game, and you want to win. So be on the winning side after people have already lost. So I hope that works. Hope that works for you guys. Again, if you want this indicator, shoot me a message on Discord and I will give it to you. I don't charge for it. I just ask that people make money and thank me and become better traders because this is something that took me half a decade of losing to learn and figure out. And I've been using it for half a decade now or more to win. And I want you guys to as well. So hope that helps. Trade wisely. We'll see you guys in the next video.